This episode of AU Manufacturing Conversations is a session recorded at our recent Spotlight on Scaling Up seminar held on June 25 at University of Technology, Sydney. A big thanks to everybody who bought a ticket, everybody who presented, and to the sponsors who made it all possible. BDO in Australia, the Australian Business Growth Fund, and the Advanced Manufacturing Growth Centre.
Hi everybody, good morning. So my name's Ryan Pollett. I'm here with BDO. I'm our national leader for the manufacturing and wholesale industry. And it's a pleasure for us to be supporting this event today, and really pleased to have you all here. And hopefully we'll have a really good session now talking about patient capital. We've got three excellent companies represented that we'll hear a little bit about shortly. All of them have been on that difficult journey from concept through to reality, continue to invest in R&D throughout that journey, which is really impressive. It's at the forefront of each of their businesses. And I'm sure, whether you're developing new technologies, scaling advanced processes, or using innovation to remain competitive in your own industries, I'm sure their experiences will offer valuable insights into innovation and how patient capital is very important in what we're doing here. So first of all, I'll just quickly introduce the panel. So first of all, I've got Geoff Bell from MicroBioGen. Geoff's the CEO of MicroBioGen. MicroBioGen is an Australian biotech company specializing in advanced yeast innovation. With over 2 decades of research and development, MicroBioGen has created a proprietary platform that enhances yeast strains for a wide range of industrial applications, including biofuels, food, and sustainable energy. So welcome, Geoff. And then I've got Phil Hodgson, who's the CEO and Managing Director of Calix. So Calix is an Australian environmental technology company that develops innovative solutions to help industries reduce their carbon emissions and operate more sustainably. Calix was founded in 2005 and is known for its unique kiln technology, which it applies across a range of industries. It also works on projects related to direct air capture of CO2 and processing of critical minerals. And finally, I've got James Walker, who's the chair of BluGlass. So welcome, James. BluGlass is an Australian semiconductor innovator pioneering next-generation gallium nitride, laser diode technology. Spun out of Macquarie University in 2006, BluGlass has developed a proprietary manufacturing process known as remote plasma chemical vapor deposition, which I'm sure we'll learn more about. I know nothing about it. A low-temperature, low-hydrogen technique that enables the creation of brighter, more efficient and more sustainable photonic devices for use in the industrial, defense, display and scientific markets. So it all sounds very complicated, but I'm sure these three guys will be able to explain it to us in a bit more detail in layman's terms. But we're really interested to hear about the journey that they've been on. So I guess, probably to kick things off, we'll probably start with that development journey. So maybe, if each of you could just share briefly the origin story of your company's core technology and how long it took from concept to commercial traction. Perhaps, Geoff, we could start with you.
Sure. Thanks very much for the introduction. So MicroBioGen, my background's actually stockbroking. While I was doing that, my brother, who's a PhD molecular biologist, had developed all this cool technology along with another person, Paul Atfield. So way back in 2000, I funded him into their company. They'd got proof of principle that they could actually do things that others couldn't by 2005, where we did a Series A funding round, $6.8 million, which sounded like a lot of money at the time. But then the real hard work happened where we did our first dollar, the first check we got paid was in 2017. So I'm guessing that's 12 years of paying sort of 12 to 15 scientists salaries and taking through that whole journey to actually get our first product out to market. So that's just a little bit of the history there. So it really... I won't go into the details about who our investors were at this stage, but yes, it's a long and it can be perilous. But if you do keep very careful watch on your money, for us we did make it. It was a little close at times, but we did make it, and sort of we're over that valley of death now.
Thanks, Geoff. And Phil?
Yes, thanks very much for the introduction as well. Hi, everyone. My name is Phil Hodgson, and Calix is an Australian technology company. We're developing a new type of kiln or furnace, a new way to heat stuff up, as we say. I founded in 2005, so we've been on that journey for quite some time. With respect to the kiln or furnace that we have, it's quite a bit different from a conventional kiln or furnace. Essentially, it's a rather large steel tube. I usually have my little flat pack model available here just to demonstrate the tube. So I carry this around with me. And we heat this externally, so we can heat it with conventional fossil fuels, waste, biomass. We can heat it with electricity. So the first advantage of the kiln is we're very energy agnostic. Whatever we heat goes down the middle. It's got to be a fairly small particle size. Basically, it gets dropped down the tube. We've made ones a little bigger than this. Okay, so the biggest ones we've made are 1.8 metres in diameter and over 30 metres high, processing over 50,000 tonnes per year. So we had to scale. This was sort of an idea in someone's head in 2005. We built our first full-scale version, 2013, down in Bacchus Marsh in Victoria. That's where we first started earning some income as well. And we've since gone on to build one in Belgium, at a Heidelberg cement facility, where we use this one core technology as a new way to make cement or lime, a much lower carbon way to make cement and lime. And we're just in construction right now in the Pilbara with a company called Pilbara Minerals, using one of these to extract lithium at the mine site using solar energy. So a long journey, multiple different applications. I was just looking at the photo of me up there. I think that was about 7 years ago. So you've probably noticed just a slight change in colour. So it's a long journey, and it's also a stressful journey. I heard about resilience in the earlier session as well. So with these sorts of things, you've got to have a long-term view, and you've got to have resilience. Anyway, so there's a little bit about the Calix story, but obviously there's a lot more to come.
Thanks, Phil. And James?
Hi, everyone. Thanks for making the time today. So BluGlass, there'll be some people in the room who know the story. We spun out of Macquarie University in 2005 and went straight from a provisional patent to the ASX in 2006. Very weird journey, very strange journey. I'm not sure you would go straight from a provisional patent and some great science to a ASX IPO today. But in 2005, 2006, private capital was not as available as it is today. And the directors at the time decided the ASX was the right place to go. So we've been listed now for nearly 20 years. And as a technology company trying to find out the right way to commercialise your technology in a public environment is a strange and difficult journey to go on. But I feel actually quite comfortable about if we hadn't listed the company back then. I've only been involved 7 years, so I can't take the rap for listing the company. But if we hadn't listed it at that time, we wouldn't have built up a great shareholder base who were on the journey with us on commercialising this great Australian technology. The core technology is a very unique semiconductor manufacturing process, which has lots of applications. And as a founder, one of the difficult things you get to do is where do you get to choose to take that application? Where should you focus? And BluGlass would be a great case study of, on that journey over the time, we've gone from being, we should make the semiconductor reactors, we should license our technology to some LED manufacturers, and lots of things in between. But 7 years ago, which is really, in my mind, the rebirth of BluGlass, we decided that with this unique technology, which is world-class, there's no doubt about it, where could we play a role in an industry where we can actually influence that industry and build a sustainable business? And that led to us deciding about 6 years ago to become a laser-dyed manufacturer. Lasers are used in almost every application of today's life, from advanced manufacturing, medical research, biotech, defence, communications. Lasers are a core component of any of those applications or any of those new markets being created today. Lasers are absolutely fundamental to quantum computing and quantum sensing going forward. And we saw a unique opportunity with our long history in working in gallium, which means we can produce lasers at particular wavelengths, where we can build a sustainable industry, not just a company, but an industry where we can be very unique in the world scale. There are only 5 gallium nitride manufacturers in lasers in the world, 2 big guys, which is great for us, and then us as the third nimble supplier, starting to create market share, taking market off those guys, because we are providing the wavelengths that, particularly in quantum computing, that they can't currently get. So we're super excited about our journey. We spend about $9 million a year on research in Australia, which is great. But we're not there yet. We're still commercialising, but we're getting closer every day.
Fantastic. Thanks, James. I think we'll just dig in a little bit more around that R&D journey then. So probably, Geoff, starting with you again, what were some of the most significant technical or scientific hurdles that you faced early during the R&D years, and how did you sustain momentum through those periods?
Yeah, just a little bit of background. So we're an industrial biotech company. We specialise in one microorganism. You'd know it as baker's yeast. It's called Saccharomyces cerevisiae. It's the world's number one microorganism. There's $2 trillion worth of products don't get manufactured without it. So it's not just baker's yeast, it's wine, beer, fuels, extracts, insulin, all this sort of stuff. So we had our principal scientists, very smart, thought that they had worked out a better way of making this thing more industrial and better. But if you can imagine, when you start a company, you don't think it's going to necessarily be a success. You're just starting the company. There was us and the two scientists. So we put in a shareholders agreement. We started the company. Once we'd got our institutional finance, that was when we had sort of proof of principle that this could really be taken to scale. We still had 12 years of 10 to 15 employees to bring along on the journey. And that entire journey is relatively risky. We're not collecting checks every day. We can't pay bonuses. We don't have them. Australian rules don't let you give options without a sort of cost. So it's difficult to incentivise them as well. So our strategy was through those difficult years was simply have a really great place to work. Work your own hours, get your work done, be flexible, friendly environment, keep the employees fully informed as much as you can with are we making progress, how important their work is towards getting a commercial partner and actually getting product out there. So that's how we got through that period. Once you start making money, things become a lot easier. You can pay bonuses and suddenly your equity is worth money and you can incentivise people, etc., and they'll actually believe you. Whereas in the first 15 years, they're going, hey, this equity is not worth much. So, yes, there's definitely a really significant long journey, and I think the hardest part, of course, is the early years, and they're the ones where you really do have to put your thinking cap about how to get through it.
Thank you.
Yeah, I guess with research and development, which we're still undertaking, as no doubt my colleagues are as well, the key things that we've found the most difficult is balancing optionality with focus. Because when you've got a platform technology, there's all these wonderful things you can do. And in the previous session, I think I heard about the shiny ball over here or the grey ball that's actually earning some money here. Sometimes you've got to focus on the grey ball. It's not necessarily that you throw the shiny ball out. But optionality and focus, you have to balance all the way along the journey. And the second thing is, of course, again, as was mentioned, the employees that are there who are going to make it happen are really important, and it's a long journey. And so very early on, we had an equity scheme put in place where employees are part of the company itself. And so every single employee in Calix is a shareholder as well. There's a few things that achieves, and forgive me for being a bit Machiavellian here, but there's a lot to do with R&D and IP. And it's all very well to have patents, but if your patent actually describes what it is you do, it's a bad patent. All you want to do is create the elbow space with your intellectual property, with your patents that you can. You never give away what you really do. But of course, what you really do is in here, in all of your employees. And so because they're owners in the company, it creates a nice virtuous circle. They stay with you. And they're also motivated as well to achieve a great outcome. So, yeah.
Thank you, Phil.
So I'd echo that as well. One of the advantages of being a listed company is that you are allowed and you can give equity to your staff in a meaningful way that means something to them. We've done that for a very long time, almost since we started listing. And so the team are aligned to what we're trying to achieve. But really importantly, the people we're hiring are just very excited by the tech we're creating. It really is world-cutting stuff. And for people to leave their universities, come to a job where they can actually continue that education and actually make products that no one else is making, gets people pretty excited, I've got to say. So our R&D team absolutely focus on commercialisation and getting there with the products, but they know they're actually competing in a space where there's not a lot of people doing that work. We've been working in gallium nitride for over 15 years, and there's not a lot of people doing that. Gallium nitride is hard, so attracting the right people is super important, but it really comes down to what we're trying to create, what industry we're trying to create from here.
Thank you. Yeah, totally agree. It's absolutely fundamental to bring the employees on the ride and, to protect that core technology as well. So I guess just to pivot a little bit and talk a bit about funding and sort of, the journey that you've been on there and patient capital. So patient capital is often cited as essential for deep tech. How did you approach funding during the long development phase? And what type of investors or funding models proved most aligned with your company and technology? Geoff, you happy to go first again?
So as I said, my background was stockbroking. So back in 2005, I was already in the industry. I went to a couple of clients. They happened to be hedge funds, and they gave us that 6.8 million. So in those days, I just went up and had a meeting, and an hour later they said, "Here's the money." It was that easy. That doesn't happen anymore. But once we got that $6.8 million, we had to make it last. And to give you an idea what we did, so that 6.8 million, 2017 first check came through. Through that period, we probably spent $25 to $30 million to get to first product. So how did we do it? Well, we got $7 or $8 million of federal grants through basically ARENA and Oz Industry, which was absolutely essential, and the tax R&D. If you put those two together, without them, there's simply no way we would have got to where we're at. So, I do hear people moan and whinge a bit about the Australian environment for startups. Actually, we have some pretty good programs here to help you out. So, I think that the government really is there to help. We've been very, very appreciative of that. And really it was that funding. And then the other thing to say is that we spend 85% of every dollar on R&D. So one of the things that we have really focused on is minimising head office management costs, which sadly is management salaries as well, which includes me, but it really, really important because management, okay, you've got to get commercial deals, but the real thing that makes your product or company work is your R&D team. So very much look after those guys as well as we can, minimise the spending, and that's how we got there. It was a combination of very careful spending and grants and R&D tax.
Yeah, a similar, I guess, story. Certainly local government or when I say local as in Australian, because I'm thinking overseas as well, of course, which I'll cover. But the Australian government is very good with respect to things like the R&D rebate. If you don't know about that, go and have a look at it. It's access to funding that you'd be surprised how broad it can be applied. But there's new initiatives by the Australian government out now as well in terms of manufacturing, which most of you would be aware of. Absolutely consider those. Be aware, though, applications take a long time. They involve a lot of work and they take a long time to make a decision as well. So you've got to be patient there as well. I think patience may be the theme of today. To give you a bit of a sense, certainly some early R&D rebates and grants and those sorts of things got us going. Some funding from core shareholders, early, angels at the start of the company got us going. Then the company, and this is before I joined, I'll say this, took out a convertible note for $30 million. And I spent the first 2 years of my job, I joined the company 2013, I spent the first 2 years of my job unravelling that convertible note. 30 million in convertible note looks horrible on your balance sheet, and any new investors coming in will run a mile. So the money could be really tempting. It's just there, this convertible note, just beware of those types of funding instruments. So anyway, we unwound that after 2 years of work and basically worked towards an IPO. And an IPO brings with it certain advantages and certain disadvantages. So in the public market space, you're very much at, especially as a tech company, and we were starting to earn some income, but we were still what I'd call pre-profitability, and we still are. So you're very much at the mercy of the share market itself. So being a public company, you get blown about by the winds of trend. Certainly about 3 or 4 years ago, decarbonisation, this is, I guess, before the Trump era, etc. Decarbonisation was very popular. We were worth about 1.4 billion Aussie bucks on the share market. So one of the things that a stockbroker said to me is, when the ducks are quacking, feed the ducks. We raised $80 million at that time, and that has helped sustain us since, because with the winds that come against you, then when you can raise money, raise money. Now, of course, that then goes to when the winds are against you, the thing that we're sitting there as a public company. We've got reasonable management overheads, which is difficult to avoid as a public company. But I've got to say that being in the public space has really helped us, and cycles will happen. But so my key lessons: beware of convertible notes, take advantage of government grants. Listing is a wonderful option to get access to capital when the winds are blowing, and when the winds are blowing or the ducks are quacking, you feed the ducks. There you go.
Thanks, Phil. Some great advice. And James?
Well, I sound like I'm going to be echoing exactly this, right? So we should all be looking at government grants. The R&D tax scheme is world class. I mean, us and maybe the UK have the best schemes in the world. And it's non-dilutive capital, and you get it fairly quickly, and there are now credit providers who can bring that forward for you. So all grants should be your first option if you can get them. Being public and patient capital probably seems like those two words don't connect. I think in our experience, it's the complete opposite. So we are very transparent about where we are in our product development, where we are with our technology. And because we communicate that to the market, and I think we do an okay job communicating to the market where we are in our product development cycle, where we are in our business strategy, that allows investors to go, well, we were on the journey. We understand where this company is going. We can actually invest in this company because we feel like we know how far away they are from being profitable, and we're not profitable either. But I think that transparency in the public market helps you get investor confidence, and therefore people are happy to be a little bit more patient about their capital, assuming you've got the right investors in the first place, right? There are some investors who would invest in public companies who should not be in BluGlass. But if you're looking for a dividend, as a great example, don't invest in BluGlass. We're not there. But if you understand the journey we're on in the story, then the benefit of being on the public markets is you can actually get out. So patient capital is great, and if you understand where we are, then you'll stay invested in us. But if your own circumstances change, you can actually get out in the public markets. So I think that de-risks, from an investor point of view, investing in deep tech or early tech. You do have that sort of de-risking capability that you can get out in a listed company.
Thank you, James. I guess just moving on now a little bit towards the commercialization sort of stage that you've reached. I guess for each of you, was there a pivotal moment, a breakthrough, a partnership, a policy shift that accelerated your path to commercialization? For example, I know MicroBioGen, you've got a recently announced global licensing and collaboration deal with LSAF. That's been a major milestone for the company. So I guess, what did it take to reach that pivotal point, and how has it changed the trajectory of the company?
Yeah, so I guess my background's actually geology and geophysics, and I'm trying to run a biology company here. So it took me a few years to actually figure out what was going on with the company. We had to come up with a strategy, and our strategy is to work. We're a small Australian company. Our strategy is let's work with the biggest and best global corporations in the world. Now, to do that takes time. And our first partner is Novonesis. Maybe no one knows of them here. They're the world's largest industrial biotech company. They're $40 billion market cap, 12,000 employees, thousands of scientists. Fantastic company to work with. We are now fully integrated. Our first agreement was 2014. We're now fully integrated. They're number one in the world in biofuels, and we're core to their biofuel division to deliver the required genetics for their microorganisms that they engineer for that industry. Since then, we obviously want to diversify our partner base, etc. So we're a yeast development company. So we have spent the last 5 years building a relationship with the world's largest yeast company. Now, this company has over 80 full-scale facilities around the world. And we've now, after a lot of negotiation, getting to know them to know us. And what's really important here is you need to get in with the right company. Getting with the wrong company would be a disaster. So we spent 5 years getting to know them getting to know us. They already know us because we ruined their biofuels division, but that's another story. But we're working with them. We only a few weeks ago signed a long-term license collaboration agreement, which means that over the next several years, we will integrate ourselves into their R&D pipeline and their product pipeline as well. So really important. So we have more to work on, but our strategy is if we work with those big guys, because if you're working with the market leaders, IP becomes a lot less of an issue. If we're going to come up with a new yeast and you're working and the biggest guy in the world is selling it, you're going to have a lot less problem. Obviously, you have to patent, et cetera, et cetera. But that's been the strategy, and it really has worked till now. Just on our Novonesis agreement, for every dollar I spend on salaries, lease, et cetera, we collect over $2. And I want to lift that to $4 or $5 over the next few years. So we do a capital light model, and we work with the big guys who can, and we're happy to take less money so long as we can deliver them strategic advantage in their particular markets.
Thanks, Geoff. Phil?
I guess if I think back to a pivotal moment in terms of commercialisation, we were stuffing around in Australia for about a year or two trying to do cement. So again, using our core technology, we had obviously some cement companies here in Australia who we were talking to. But then you think about what the global market is, and the cement companies here in Australia, some of whom are or have been listed on the market as reasonably sized companies here, absolute minnows compared to the global market with respect to cement. And so we made a decision in 2014 to head overseas. And so literally just packed our bags, got on a plane, had made a few contacts and went and saw some of the largest cement and lime companies in the world. And it's from there that basically we started to get the commercial traction, first through collaboration to get an EU grant to build this first facility that we built in Belgium. And then we got another EU grant, and we've just commenced site works on a second facility at a Heidelberg Materials facility in Germany. And so I think the key thing for us is when we thought, we've got to think global. We've just got to get out there and take our idea and our technology overseas. And as was mentioned, if you're hitting these cement companies, they've been around for 100 years. The last major innovation was about 80 years ago. It does take time. You've got to be patient. You've got to work almost at their pace. And that means you've got to set yourself up for, that journey. But when it happens, it happens. And as was said, once you're there, it's almost like pushing a bowler off a cliff. It just sort of happens, although a bowler probably moves faster than a cement company, but it does happen. So think global, think big.
Thanks, Phil.
All right. And as I said earlier, BluGlass is a great example of commercialization strategy and how you have to pivot. So we started off in the hardware design, then moved to licensing our manufacturing process. The real commercialization moment for us was about 7 years ago when we looked at the market and said, where can our manufacturing process make us build a product, allow us to build a product that would be world leading, but also in a market where the customers are looking for a new supplier. And our customers were telling us that they were sick of working with the big guys. They weren't getting the flexibility on the wavelengths, the colours, or the form packaging. So to have a third company come in that could actually be that nimble third supplier meant that we had the technology that we knew was going to be world-class and could produce the best products, but we also had a market where people were looking for a new supplier. And that was really important from a commercialisation and revenue point of view. That led to really a rebuilding of the board, in that we brought in some laser pioneers from the US. We reshaped the management team, brought in a laser-dyed CEO who's based in the US. We ended up buying a manufacturing fab in California where we could do all the downstream processing, turning our great technology here out at Silverwater, turning those wafers then into lasers. We do that in California, which has proven to be, with the change in the world order in the last 6 months, to be a phenomenal decision for us. And, lucky in the end of the day. But to have a manufacturing process in the US, to be one of only two GaN laser-dyed manufacturers in the US, has opened up significant commercial doors for us, including some defence contracts with the US Department of Defence through the CHIPS Act that we haven't been able to crack here, but we're working on that. But the US has opened up some great opportunities for us in terms of product development grants, product development revenue, and then leading to actual product sales. So that pivot 7 years ago was phenomenal for us.
Thanks, James. Maybe just a couple of questions from the audience if we've got a couple of minutes. Did anyone have a question? All good? Oh, got one. Yep.
What was the complication with the convertible note? If you don't mind.
How long have you got? So a convertible note is one of those things that hedge funds used to, and still do, deploy into to reduce their risk. They have various clauses in there that allows them to convert at different rates depending upon how the capital structure of the company changes. So they protect their downside basically with these conversion mechanisms. The unfortunate thing is any capital that comes in on top of that is at high risk, because if that capital is at a lower value, then the conversion can be taken place at a much higher proportion of the company. So this particular convertible note had particularly punitive clauses around that. And so we basically had to take the company to a second before midnight, tipping it into administration to stare down the convertible note holders and force them to convert at a certain rate. Yeah, so we basically had to threaten to dissolve the company.
Yeah, interesting story. Absolutely. Thanks for sharing. And any further questions? Oh, sorry, there was just one over here.
Yeah. So Phil, you mentioned earlier that Calix used to be $1.4 billion market cap. So I'm interested on the panel what lessons you've learned as tech listed companies in maintaining share price and market cap.
What lessons to maintain? Unfortunately, you're subject to the tides of where the market's heading. And I guess my key learning and lesson is, you ride the wave when it's there, because you've got a long-term vision for the company and where it has to go and those sorts of things. And it does bring a whole lot of pressure and a whole lot of management time when things turn against it. Right at the moment, we've been smashed. We're 95% down from those highs. And that takes a lot of management time. But then, I hark back to the talk we had about patient capital and the right shareholders. The shareholders that were there at 1.4, the majority of them are still there. So, we've got shareholders like Aussie Super, who are 15%, our largest single shareholder, having the right shareholder base there. And they basically say to us, don't worry about the share price, focus on getting this commercialised, getting those milestones sorted out, and the share price will take care of itself. So it is distracting. Take advantage of it when the times are good. Be prepared for when the times are not good. So always have a plan for when things turn against you.
And the only thing I'd add to that is just communicate the strategy to the shareholders. Always tell the market where you are and where you are in that journey of getting to revenue, getting to sustainability. And then the shareholders can make their own mind up if they're on that journey or not. But if you're consistent with your story and you communicate it regularly, that's probably the best thing you can do to generate interest in the share price, generate volume, and hopefully that leads to a share increase. BluGlass is in a very similar situation. If you are not a cash flow positive company and you're in deep tech, the ASX is a pretty tricky spot right now. But with the turning around of more contracts, more revenue, and moving to profitability, that will turn quite quickly. The one thing about the ASX is once you've started getting that traction and people believe that the journey you're saying is likely to happen, you do get rewarded with that pretty quickly in the ASX.
Thank you. Got time for one more, Brent, or do you want us to?
The sponsor is the next speaker, and I feel this time, so let me just put that up there. But yeah, sure. We'll make it.
Just have a quick question. Yeah.
Just have a quick question. This is a general question about the grit and tenacity to last. What's individuals? You all have different views on this, but I'm interested in your views.
Well, I guess I'm probably the newest member of the team. This company's been been listed for nearly 20 years, 10 years worth of research beforehand. I've only been on the board 7 years, but I've been responsible for the last few capital raises. And I only do that because I actually fundamentally believe in what we have at BluGlass is world leading. And there actually is a real opportunity to create an industry in Australia that doesn't currently exist. So GaN laser diodes, there's only 5 manufacturers in the world. A laser diode fab is not a $10 billion investment. We could have a manufacturing facility down here for about $50 million. And my dream is that we could actually create that industry here. We've got the capability, we've got the skills. And if you think about who our buyers are, particularly in the quantum sensing and quantum computing space, we don't have to be in the US. So I'm fundamentally on the bus that this is world-leading technology, and we have a unique opportunity to create something here, and I would like to deliver on that. So that's why I'm still around.
Well, yeah, I mean, look, facetiously, I guess, just make sure you married the right woman. I mean, when we started the company and I quit my day job, I took an 80% pay cut for 10 years. So there is some, personal cost if you're going to build a company. You can't expect to get an external financial services salary running a startup company when money's tight. So yes, those early years you really do have to accept that the lifestyle you had isn't the one you're going to have if you want to go down that route.
Yeah, and I'd just add, because it's been an interesting, long journey, as I say, the colours changing a little bit, all that sort of stuff. First of all, belief, absolutely, that's critical. Yep, you've got to make sacrifices. Why do you do it? I'm doing it because, I'm surrounded by people who are totally focused on the same thing. So in my mind, if I was going it alone, I'm not sure I could do it. But because, we're a team of dedicated people, when some of us are down, others are up. And I think you've got to build the right team, and that team has got to be totally focused on the vision, and that way you can get there.
Thank you. I think that's a really good place to end it. So thank you very much to Geoff, to Phil, to James. Thank you.